everyone, and welcome to our Pitchbook Presentation proposal for DaVita acquisition by Medtronic Corporation. Today's information will be presented by the following team members. First, we have myself, Uchama Iwevalon, who is the Chief Merger and Acquisition Counsel at Medtronic. I have over 25 years of experience working with medical devices. I have also been working at Medtronic for the past 7 years. Next, we have Zhangwu Lin, who is the Vice President of our Mergers and Acquisitions Division. He's been at Medtronic for over 10 years, and he brings with him over 17 years of medical device experience. Last but not least, we have our Senior Merger and Acquisition Portfolio Manager, Yusuf Masood. He's been with us Medtronic for 6 years. He has over 12 years of experience in the medical device industry. So before we get into the meat and potatoes of our presentation, I just wanted to provide a high-level summary of what we are going to be talking about today. As this acquisition will have the potential to be one of the biggest in the 21st century, I wanted to make sure we touch base on all of the important topics that concerns everyone here today. We're going to touch on our overall valuation summary and recommendation, followed by a valuation of DaVita as a standalone entity. This will include the target WACC calculation and standalone valuation. Then we will go into our combination analysis, specifically looking at our pro forma EPS and key credit rations. Following this, we will then look at our income and market value approaches, and to conclude, our financing approach. So the big question that everyone has is, why should Medtronic acquire DaVita? Let's look at the background of both companies. Medtronic is known to be the largest medical device manufacturer in the world. With $32.3 billion of revenue so far in 2024, the company has definitely earned its position in the healthcare industry. Medtronic has operations in over 50 countries and treats more than 30 diseases, particularly related to these diseases that affect the kidneys, like diabetes and renal failure. Medtronic's motto is alleviate pain, restore health, extend life. DaVita is also a big name in the healthcare industry. In fact, the company is one of the biggest providers of dialysis and medical services in the U.S. With a $12.3 billion revenue so far in 2024, the company has definitely made a name for itself. DaVita operates through two segments. The first and more popular one is the U.S. dialysis and related lab services, which offer kidney dialysis treatment services in the U.S. The other segment, and not as popular, is the Strategic Initiatives Group, which looks at clinical research programs and disease management services. Not only does the acquisition of DaVita make sense from an industry perspective, but an acquisition also aligns from a strategic perspective as well. Data intelligence and artificial intelligence are making strides in both the industry and regulatory bodies, particularly as it pertains to medical devices. And of course, with our main goal of increasing access to care globally, an acquisition will improve our technology platform, introducing better telemedicine technologies, robots for patient use, and the ability to utilize augmented and virtual realities. As you can see from the chart in the bottom right-hand corner, this acquisition will positively transform kidney care for patients, solidifying us as the go-to company for kidney care treatment.
Medtronic and DaVita healthcare partners have partnered in the past for investigational studies for cardiac arrhythmia in patients undergoing dialysis. And most recently, in 2023, together Medtronic and DaVita launched Mozarc Medical, which is a new company designed to reshape kidney health technologies. The aim of Mozarc Medical is to develop kidney health technologies, specifically home-based products, to improve the accessibility of healthcare products. We believe that instead of similar equally shared platform, Medtronic should outright purchase DaVita to have full ownership of the IP and trade secrets, as well as similar strategic mindsets of making care more accessible to patients. Medtronic has a strong research and technology platform, and acquiring DaVita would enable Medtronic to further bolster their R&D. It would also enable Medtronic to have better control over its manufacturing capabilities and will provide a one-stop shop for renal care healthcare solutions. A summary of our SWOT analysis shows Medtronic acquisition of DaVita would dominate both in the US and international markets of dialysis and kidney disease treatment. Despite Medtronic trying to step away from the kidney disease specialty, this acquisition would provide new innovation in kidney care and integrated care offerings. This also gives Medtronic the opportunity for research potential and additional devices related to cardiovascular and neurological conditions. Despite these opportunities, there still remain some threats towards this acquisition, and for both companies on an individual level. Changing healthcare legislation, increasing operating costs, and fluctuating exchange rates threaten the international and domestic markets. Nonetheless, the growth in net sales and new income through an acquisition would help to alleviate such risks. This brief insight into our proposal would help you all to see that an acquisition between Medtronic and DaVita would be an amazing opportunity to take advantage of. Medtronic has nowhere to go but up, so let's help ourselves get as high as we can. For the standalone valuation, we calculated the weighted average cost of capital to be 10% for DaVita using the input of DaVita financial statements and the formula to the right. This calculation is critical for determining the appropriate discount rate for valuing DaVita's cash flow to ensure a fair price is paid that reflects the risk and return on investments. Compared to 5 of its competitors, the median weighted average cost of capital was 10.46%, meaning that DaVita is slightly below that number.
Here is an example of our discounted cash flow with perpetuity growth. Using this method, we were able to estimate a price per share of $66.80. Here is the example of our discounted cash flow with multiples. Using this method, we were able to estimate a price per share of $56.83.
We began with a deep and detailed market approach valuation, considering DaVita's key competitors such as Baxter International Inc., Boston Scientific Corp., TNet Healthcare Corp., Fresenius Medical Care AG, and Encompass Health Corp. This competitive analysis provides a comprehensive perspective on DaVita's market positioning and reinforces our valuation conclusions. And we compare DaVita's financial metrics with industry medians. The enterprise value to revenue, EBITDA, and EBIT ratios highlight DaVita's strong market position. For instance, the median EV over revenue stands at 2.12, while DaVita's revenue is $12.34 billion. We then calculate the implied enterprise values based on revenue, EBITDA, and EBIT, resulting in values ranging from $26.1 billion to $47.1 billion. After adjusting for total debt and adding cash and investments, we derive the implied equity values. Following this, we compute the implied equity per share values. The revenue-based valuation indicates $154.24 per share. The EBITDA base shows $183.31, and the EBIT base presents $376.20. Using a weighted average method, we conclude with an equity value per share of $272.49.
Next, we have our combination analysis. Looking at the shares outstanding, market capitalization, and 2024 earnings of both DaVita and Medtronic, we were able to perform a merger analysis to determine what the pro forma EPS or earnings per share would be for 2025 and 2026 if Medtronic were to acquire DaVita. Here are our recommendations for negotiation terms and logistics. First, we would like to have an introductory meeting with DaVita's executive M&A team. As this acquisition has the potential to be the biggest in the industry, I would like to make sure that we are on friendly terms and have a great working relationship with one another. As we all know, DaVita has recently acquired Mozarc Medical, so we anticipate that they are familiar with the need to foster mutual understanding of each other's strategic objectives, potential synergies, and concerns. All of this will be done to facilitate a smoother approval process and gain mutual respect from DaVita's shareholders. We will also need to look at a combination of debt financing and existing financial cash financing. Our recommended offer is $66.80 a share, and our highest offer will be $272.49 a share, which is around $235.3 million. Last but not least, one of the most important aspects of this acquisition would be to conduct due diligence. Here are some questions that we believe are important. What is DaVita's current organizational structure? Are there any labor disputes or problems currently present in the company? Were there any in the past? What are the current employment agreements, compensation plans, retirement benefits, and are there any potentials for layoffs? Are there any antitrust issues present? What is DaVita's current marketing strategies? And most importantly, who owns the company's intellectual property? Thank you all so much for listening to our presentation. I will now open the floor for questions.